Hi everyone, I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Toronto at the beginning of March, and I'm joined by a company that hasn't been here before, Scorpio Gold. So Zayn, thanks so much for being here.
Well, thanks for having us. We're really happy to be here.
So you are new as CEO of Scorpio because Scorpio has just undergone a significant transformation. So talk to me about how and why you became involved in Scorpio Gold.
Yeah, so we started with an exploration project that was adjacent to Scorpio's what I'd call long-term flagship project, the Mineral Ridge Mine. We originally were very interested in partnering with Scorpio or looking into do some sort of transaction with Scorpio to use their infrastructure with our exploration project. However, as we started to learn a little bit more about the situation Scorpio was in and the current management situation and cash position, we kind of came to the conclusion that it probably made sense to put the companies together and that the company really did need a new team, a new focus, a new approach, and obviously capital to go along with that.
For sure. So the focus, the thing that brought you together was your exploration project called North Star and their mine called Mineral Ridge. As it turns out, Scorpio also had another project that they'd kind of brought in as Mineral Ridge had been shut down because it wasn't working out so well in that moment, which ended up a bit of a forgotten gem. So introduce Manhattan to us.
Yeah, so Manhattan was kind of, as you said, Scorpio used Manhattan as a way to kind of evolve the company. And we really didn't know anything about it. And I don't think the market over the past 3 years has really even known anything about it either. So Scorpio completed the kind of consolidation of the district in 2021. And with that, with acquiring the ground from Kinross, they acquired a 4,300 acre package from Kinross. It's the former Echo Bay mine called Manhattan. It really presented this opportunity to look at the whole district from a new exploration perspective, being able to leverage some of the permitting and infrastructure that's already there, including the 400 ton per day mine and the underground, and really kind of move the project forward with, I would very clearly say, multi-million ounce potential.
And that's what's interesting is between Kinross's work and the holes that Scorpio drilled that they didn't get a lot of market attention for because the mine had failed and the markets were tough and it just capital markets wise it didn't turn out. But the amount of work that's been done down there, like you say, it has delineated like a significant near surface zone of gold, which is a valuable thing in Nevada.
Yeah, and I think if you look at it from a big picture, like obviously there's been discovery there and there's resource there that has been defined. But if you look at it from a bigger picture, when you see its regional geology and regional kind of proximity to Round Mountain, it really kind of makes it a very much more interesting story if we can really build a much bigger resource there over time.
There's been another piece of news recently where AngloGold Ashanti just defined 9 million ounces at its Merlin project, which is a very similar geologic setup. It's a caldera, so like a collapsed old volcano, and where you get structures that cross what they call the caldera rim. That's sort of that's what Round Mountain is. That's what Kinross's 15 million ounce produced mine that's on the other side of your caldera. That's what it is. Merlin that AngloGold just defined 9 million ounces at. That's one of these, and that's the setup down here at Manhattan as well.
Yeah, and so the Reliance Fault is kind of the controlling fault, controlling the mineralization at Manhattan that we've identified, and where the Reliance Fault actually meets the caldera, where that contact point is, we haven't even drilled there. There's been almost no exploration there, and that's actually when I was there earlier this week, and that was probably the most exciting target that we saw. Just looking at this wall, this big hill full of adits and historical workings, and it's never been drilled.
Oh my gosh.
And we didn't even, to be candid, I didn't even realize that was part of our land package, but it completely is. Yeah. So, yeah.
So if we want to break it down to what's happening, the first thing that you do is you take a bunch of the work that's already been done, and you sort of make that tangible. You turn that into a resource with some drilling, modeling, and those kinds of things. You can turn that into a resource, and then you try and you test this exploration potential that you and I were just talking about, and see where it goes.
Exactly. I think it's going to be a concurrent process. We're going to be doing the drilling that we need to do to get our estimation compliant, one, and at the same time we'll be doing step out drilling and exploring. And I think collectively that might actually result in us being able to put out a bigger resource, but at least we have a baseline kind of expectation that it'll be something that's significant, like, with good grade. And then beyond that, we have a metallurgical baseline too. We can say it's 70% recovery based on what Kinross was getting or what Echo Bay was getting in the 80s. And then we can build on top of that in both respects.
Fantastic. Well, there's a lot to do, and that's probably not the best thing for you to hear since you just went through the process of merging two companies, which is always a more arduous process than you want it to be. But that part's done. Now you get to do the fun part, which is the actual creating new value at a project.
Exactly. Great.
Well, thanks for being here. I look forward to keeping up with the news over the coming year.
Thank you.